Good day, good day. This is another Wednesday in October for Hump Day Real Estate with the Kendell DMV. Man, who do we have with us today?
How you guys doing? My name's Saad.Chaudry. I'm a doctor loan specialist with Truist.
Hey, good to have you on the show. Now, tell us a little bit about what you do over there at Troy.
Well, thanks for having me. It's an honor to be on your show. Look forward to chatting with you and discussing some of the services that we offer. I have been with SunTrust, which merged with BB&T, and they became Truist, going on 6 years now. And one of our major loans that we like to promote is our doctor loan. It's for medical doctors that are residents, fellows, attending physicians, and practicing physicians.
Now, what are the requirements for folks to get it, for a physician to get into all of those folks that you just mentioned to get into that particular type of loan?
So the requirements, not many. We do require a valid state medical license. Along with that, we require the usual income and credit qualifications. We do check your credit, we check your income, make sure that you can qualify for the loan. But if you have all those three checked off, along with just a certificate claiming when your last residency or fellowship was completed, if it was within the last 15 years, you have a great opportunity to get a doctor loan with Truist, as good as 0% down. 0% down, great rate, no mortgage insurance.
Gotcha. And why is that so great for a physician? And why is that even why do the physicians even have access to that? Because we know that the only down payment or 100% financing deals out there normally for first-time home buyers, and probably at a lower income and buying power level.
That's a great question. It's actually a question that even some physicians ask, like, "Hey, Saad, why am I getting this deal?" I think SunTrust, they years ago decided that as far as when it comes to the type of clientele that they want, kind of business relationships that they want to work with doctors. Of course, it's a field that's never going to decrease. It's only going to be consistent and get bigger as time goes on. And I think it's an opportunity that they say, hey, we're willing to give doctors the best loan on the market, 0% down, great rate, low payments. So that way we can build a relationship with these doctors, and then down the road, they can actually work with us and explore all of our other banking products.
Now, is it also true, because I did a little research, that one of the things, that the reason why this is a big a program for doctors, that you guys are kind of overlooking the student debt?
That is true. We're a little bit more lenient when it comes to traditional underwriting, when it comes to student debt. There are some doctor programs out there that actually offer student debt forgiveness. If you are a doctor and let's say you volunteer your time, or if you're a doctor and you work for certain agencies that once you work there like 5 years or 10 years, they do have programs that they will actually pay off all of your debt. So it's definitely a great alternative. As you mentioned, there's not many loans that are 0% down. Usually those are like the VA loans, like military loans that are available. But a doctor loan is to help people that have went through the hard course of going through college and undergrad and medical school and going through it. It's a great opportunity for them to buy and take advantage, and we won't use the student loans against them.
Now, I don't know if I might be retracting a question, but now, if there's a physician he's seasoned, can that seasoned physician still have an opportunity to use this 100%?
That's right. So let's say if there's a doctor or dentist that's been practicing for 20, 25 years,
Mm-hmm.
we do have a loan for them. However, it is not a 0% down loan.
Okay.
It's a 10% down loan, no mortgage insurance, good rate. And it's because of the fact that they are seasoned, so we would require some kind of down payment.
Gotcha. Gotcha. So with that particular loan, um, when you're thinking about that, and then you look at the other products that you actually have, do you feel that that 10% loan would benefit that doctor more than maybe some of your other programs? Because I know you probably feel like the 100% program for residents and all of them, that's probably a very good program because you're not looking at, you're kind of eliminating the student debt and some of the other things. And then they, you get 100% financing. And for most of those people, they're not even fully into their career yet, right? So they're not probably making it up to their full potential and all that other stuff.
That's right. Unfortunately, I know for a lot of residents, they're working super long hours, basically going through training. I guess you could compare it to like military boot camp.
Mm-hmm.
Ton of hours, low pay, working their butts off until they get through it. So once they get through it, then they get a attending position, and that's usually where you see a big jump in their income. We will use their future income, and we can actually close on a purchase for them up to 90 days before they start. So for those type of clients, it's a great loan. When it comes for more seasoned doctors and people that have been practicing, it's still a great loan. In our industry, when it comes down to two kinds of clients in the mortgage industry, I usually ask, hey, which category do you fall in as a client? Do you fall into a cash conscious client or a term conscious client?
Mm-hmm.
Cash conscious is like, Saad, get me into a home. I don't have a lot of cash, but my credit's good, my income's good. Let's make it happen as best as we can. Term conscious client is more that, hey, Saad, I have down payment funds, I have reserves, I have great credit. Get me the best deal on the market. I usually can facilitate both kind of loans, but that doctor loan is really the best of both worlds. Even for somebody that's been practicing for 25 years, usually we would ask for 20% down and then give you a great rate with no mortgage insurance. But here we're still even just asking for 10% down, no mortgage insurance, and a great rate.
Where does that buying power start, and what's the max? So is it from 200,000 up to 3 million, or how does that work?
Good question. We actually just recently increased some of our limits. If, let's say, for example, if you're a new doctor that's just been practicing for a few years and you're starting to make good income, we can go up to $1 million with 0% down. Then up to $1.5 million loan, 5% down, and then up to $2 million loan, 10% down. Some of the doctors that are on the West Coast in California, they kind of scoff at those numbers because they say, hey, we're in LA. You can't get a phone booth for $2 million. You need to at least be 3 to 4 to 5 million. And they have to put a down payment down in order to get those higher numbers.
Gotcha. So let's just switch it just a tiny little bit, and let's talk to the maybe some of the other professionals just for a few seconds with like your jumbo loan type product.
So many times, even today, for example, I had a client that was a doctor that purchased a home, got a great rate, and he sent me a referral. Someone called me and referred, and when I just asked, in conversation, I asked, hey, how did you get my information? And they told me the doctor that referred them. So I right away said, well, are you a doctor as well? And they said, no. And I said, well, we have a product that's similar to a doctor loan, which is a premier jumbo loan. You can get similar terms. There is a credit requirement, an income requirement, and an asset requirement. So if you want to do a premier jumbo loan, we usually look at your credit, income, and we like to see some assets like reserves. It doesn't have to be with the bank, but if you have a 401k, retirement, some kind of reserves, then you can actually be eligible for a jumbo loan, and you can put down as little as 10% down, no mortgage insurance, and still get a great rate.
Gotcha. But student debt won't be forgiven the same way, correct? They don't have
That is correct.
that same.
That is correct. They're going to underwrite the loan in a way that the student loan, they're going to definitely calculate that against you. A lot of people are in a situation that when it comes to student loans, we might only use a 1% payment. And I think now underwriting has gotten a little bit more lenient, that if someone, let's say, they're not a dentist, but let's say someone is a veterinarian and they have $100,000 in student loans. Usually we'd use a 1% payment, which is $1,000. That could possibly blow up the deal, meaning that they don't qualify. In that situation, I try to identify that possible issue up front, so that way I can say, hey, contact your student loan company, start making payments. So when we do a credit check, rather than the underwriter assume a 1% payment, they'll see on your credit report, oh, this person's only paying $350 a month.
Gotcha.
And we're using a much lower payment compared to using a 1% payment.
Gotcha. So how are you feeling with the way things are going right now with the Federal Reserve's increasing the rates, the mortgage rates actually following them? What's your feeling on what's going on in the market?
Another great question. Right now, what I usually tell clients, and really what the theme of the times are, is you're better off buying a home at a lower price with higher rates than at a higher price with lower rates. So this is the time that winter's coming, and with us on the East Coast, with the seasons, usually the market slows down in the wintertime. So I think at one time, about a year ago, with the rates being very low, with COVID happening, a lot of people saw their dream home kind of slipping away. Like, I'm not even going to get into a house. I haven't started making the money that I want. But now these higher rates are actually opening the window to get a house at a reasonable price. I know the payments is not going to be ideal because the rates are higher. However, the rents are going up. So if you can still get into a home, let's say if that home used to sell for 400,000 or $500,000, if you can get into a home at 10% less, 500,000, and you can get in at 450, 5 years from now, and the rates do eventually maybe take a dip and drop, you might see that home value going up to 600,000 or more, and you have a chance of getting some equity, and at that time you can refinance. I think for most people, when they sit out on the sidelines, time flies, so I think when they sit on the sidelines, before they know it, they're hitting 40 or they're hitting 50, and then they're like, wait a minute, retirement's not that far away, and I need to get a house that hopefully I can pay off something, a tax write-off. So this is a good time to buy, and whether you're buying a $300,000 house or a $3 million house, right now is a time to get a good price. A lot of my clients that are in hotter markets, Baltimore, DC, Northern Virginia, a year ago, when a house came on the market, they would be competing with maybe 10 other offers right away.
Some of them 30 to 40.
50, yeah, absolutely. And no contingencies, no appraisal, no financing contingency. They're buying it as is. Right now, we're kind of back to those pre-COVID times where you can actually get an inspection. You might be able to get the seller to pay your closing costs, and the window is still open. But I think we're getting to a point where home ownership is not for everyone.
Mm-hmm.
It's really for the upper class. It's getting to that point, unfortunately. It's not
Mm-hmm.
just for the middle class, it's moving up into the upper, higher class. And if you can get in, I've been in banking for 20 years.
Mm-hmm.
I've never had anyone buy a house and come back to me and say, hey, Saad, I wish I never bought this house to this day. And I've probably done thousands of transactions.
Well, what people miss out on is exactly what you say. Is like, for one, it's a wealth building tool.
That's right.
Because if you're going to pay somebody else's rent, and with the way rents are actually going up, and if folks don't even know that, rents normally go up 5 to 10% a year if the landlord is following the rules, right?
That's right.
That was actually set for them to be able to create that situation. And so a lot of people might not even ever had to deal with that because maybe they've been living somewhere and the landlord's like, hey, you're just paying me. I didn't got to the retired state. I'm taking, the income that you have is paying for my car. So I never moved. There are people that in that situation and they can't come out to the market. I get calls all the time now. And they say, this is crazy. In the Baltimore City area, people call me, right? And they say, hey, can I get can you help me out? I need to find a 3 bedroom for $1,000 a month. And I'm like, where have you been?
Oh, man. Yeah. Yeah. Those days, unfortunately, have passed. And I think the people that even bought 20, 30 years ago are happy that they did. And their family members are happy that they did.
Yeah, well, that's another thing. So because you bought 20, 30 years ago, if you need to buy, you now can cash out and put down money so that you absorb the craziness of the new values, right? And so that's the beauty of actually getting into a home early, right? Because you gain equity, and when it's time, when values continue to go up, like that's what they do, because that's the wonderful world of real estate, right? That's why we want to get into real estate, has some type of real estate, because it over time has been proven to out now not fastly beat the stock market as far as making people cash rich, but as far as equity and value, there's no better investment. Do you agree with that?
I do. I do. I actually, when it comes down to it, not everyone can be born wealthy. Majority of us are not. And we're in a situation that if we're fortunate enough to be inheriting a house, I mean, it's like winning the lottery because you can sell it, you can get cash. If you want, you can hold on to it. You can rent it, make money, or you can move into it and live very comfortably. Right now, I myself am 40 years old.
Mm-hmm.
So I have clients that are buying homes and getting into 15-year mortgages where they're like, hey, Saad, I will pay the extra 2 grand, 3 grand a month because I want to have this place paid off when I retire. Whether I live here or not, I might move to North Carolina where the cost of living is lower, but then I can have a paid off home where that rent will be income that I can live off of. So I think a lot of people, especially in this kind of market economy where we have ups and downs, where you don't know if job stability is there necessarily, if you buy a home and you can pay it off, I mean, when you're older, you really can't live off of social security like you used to. I mean,
Mm-hmm.
unfortunately, it's a sad state
Mm-hmm.
where what they're paying you, you're barely paying the bills. I mean, you're not paying anything. With Social Security, those checks are smaller and the cost of living is going up and up. So you really do need, if you can, to get a property, maybe two, maybe three. Yes, it's work. It's work to be a landlord and to deal with tenants and to deal with repairs. But when you're older and you don't have the energy or the will to work, you'll be happy that you did because then you'll be able to get two or three sources of income from that rent to supplement or actually be the main income, and then your social security pension will supplement. So it's interesting. Right now, I'm actually talking to a few people that make great money, but their goals are to pay off these homes so that way when they retire, they can have a steady stream of money, income coming in, and then they also have something to pass on to their future generation.
Well, one thing to add to those folks that hopefully you share this video with is that not only to pay those things off earlier, but how about the fact that now you actually uh, can build this equity. No, but this is what I was thinking. My mind shift to another area. Tax shelter, right? They make a lot of money. How about the tax? How about the fact that they can keep more money so they can maybe even go buy some more real estate, right?
Absolutely, absolutely. And I think that, once you get a hang of things and you buy one property and you buy two, kind of like riding a bike, then having two properties and having five, and just naturally happens. Of course, more properties you get, you might want to eventually get a management company to help you. But I think naturally, um, if you can buy one property as your primary residence and then after 1 or 2 years, 3 years, move to another property, rent that out, then buy another property, that's really the most natural progression. And the reason why is because every property that you're buying it as your primary residence.
Mhm.
So you're getting the best terms, you're getting the best rates, you're getting the lowest down payments, if you like, and you're moving and you're living in the house. You know the bones of the house, you know the community, you know the neighbors. And I think, having that kind of experience living in a house makes it a great investment property for you. So, and
Uh-oh, a little technical
a house
difficulty.
that was, yeah, in the past, if you bought a house that was 50 grand, that house now is 100 grand.
Mhm.
5, 10, 20, 30 years, that house is going to be 200 grand, 300
Mhm.
grand. And if you have it paid off, you have it rented, not only will you be able to enjoy your older years, but then you also have something very solid to pass down.
All those people that missed that boat in the DC when homes were 40,000, 50,000,
Yeah.
that
Wow.
that are on the average within the last 5 years been at least 800,000, and now they should all be around maybe 1 million. And so that you gotta look
They were
at.
there, yeah, about 10, 20 years ago, not even 10 years ago, probably about 5 to 10 years ago, you could find those really good deals that, you could buy something that's pretty affordable. But now, across the board with population and everything, of course, prices are still going up. I think a lot of DC investors,
Mhm.
they almost are priced out of DC, so they are coming to Baltimore. You know,
Everybody's running to Baltimore, but it's
that's right.
Baltimore. It's a tough market.
That's
Not
right.
it's not like a DC. It's a much tougher market for where most people are going to try to find those deals. But I want to say the average home prices renovated now is in Baltimore City probably around 200,000.
That's right.
Big change from 3 years ago, 2 3 years ago. So.
Just like the price of everything, I guess. Unfortunately, we're in a situation that price of all goods, housing, services, everything has gone up so much recently. It's
Mm-hmm.
hurting a lot of people. I know that, but if you can come together, like sometimes, tradition is there for a reason. And I was born in the U.S. My family originally is from Pakistan,
Okay.
and a lot of families that come from Pakistan, what they might do is they might have the father and the mother and two or three of the children still living there,
Mm-hmm.
and they group the money together as best they can to buy a big house. And that's basically the family compound bank asset, and they do it together.
Mm-hmm.
They don't try to all separate and buy their own place, because of course it might be too much, but doing it together. So this is a time to consider going back to tradition a little bit, working with family,
Mm-hmm.
trying to buy a place, maybe get a duplex, maybe
Yeah.
trying to rearrange. But
Yeah,
this
you got parents now. If your parents are baby boomers, do they need the big house by themselves? You know.
Yeah, that's right. That's right. There's a lot of parents. And I think right now is a good time because a lot of those baby boomers are worried because the rates are high. and all of their money is in that house. And they see that house that they have losing a little bit of value, and then they see, okay, if the economy is not very good 2 years from now, rates are still high, they could maybe lose 20-30% of that value. So they're selling the house, they're taking what they can to have some money in their pocket. So is it a good time to buy? I think yes, it is a good time to buy, because you could possibly get some deals from some sellers that want to make whatever cash they can, and they're willing to take it even at a discount.
My opinion is it's always a good time to buy, right? We always, but we just have to be educated buyers, right? And
Absolutely.
it's just more about understanding how to buy. The problem with when people buy, let's even go back to 2006, 2007, was everybody was out buying heavily because of the trend. That it was buying time during the pandemic.
That's right.
Again, trending. Folks are following the trend. But even in the trend, you could have gotten a real good deal. Most people didn't. That's the reason why the trend did what it did, had people paying 50, 100,000 over, because people also need to learn with real estate, buy like an investor, right? You
I
could have
agree.
bought the ugly house, right? Instead of trying to stand in line with 50 people to look at the gorgeous house. You had no
That's
competition down there.
that's right. That's right. People don't. A lot of people don't understand that you want the smallest house in the neighborhood if possible.
Yeah, just go get a house and get in a house, right? That's just like, if your kids want to play in the sports, teach them to get in the game, right? Put in the effort so they can get in the game. Once you get in the game, things start happening, and then they don't even know what happened that made them score 20 points, right?
Absolutely. I
So
was actually watching one of your other programs that you had, another show that you had, and you and a nice lady were having a conversation, and she said something that was very poignant, where she was like, you can never buy your dream home if you don't buy your first home.
if you don't buy your first one, you got to
I
start
love it.
somewhere.
I loved it, man. I told my wife that, and I was like, what a great point. So many people have dreams of buying this huge mansion, but you got to start somewhere.
You got to start somewhere. And the
That's
crazy
right.
thing with starting somewhere is that gives you the money to build up the goal. You don't have to go and work for the money, right?
That's right. That's right.
You're going to do
Like
what you're going to.
to buy that $1-2 million house, you might need 200-300,000 dollars cash. But if you can go buy a $200,000 house, pay it off with 10 grand, you buy it, pay it off over 10 years, 15 years is paid off. Hey, you have your down payment for that huge house. And maybe at that time you have a sibling, or you have a son or a daughter that's making good income, and then you go buy that 600-800 million dollar house in the county, and you're providing the down payment from such a small deposit that you had
Small,
buying a smaller house.
small, quick story that carries right along with that. 1997, there's a buyer that buys a house. He buys it at foreclosure, $60,000, right? The area
Mhm.
probably was selling for $80,000. Today, that same area is now selling for $270,000. How much did you say that the buyer might need to get into $1 million house?
Two,
200,000, right?
that's
So
right.
from $60,000 to
You said it.
$270,000, there's your $200,000 right there to put you in
Right.
$1 house.
Compared to the same guy that rented the whole time, they'll never be able to save up $200,000 to buy that.
Not just working a job,
That's
right?
right.
Not just working a job. So look, we're running out of
Doing
time. So
and the thing is, regardless of the price point that you buy a home at, when you own a house, you own it. So there's a sense of stability, there's a sense of safety, there's a sense of, you know, a family can build from there. And whether you live there or not for all of your life is to be determined. But that's also a big thing. I think, the sense of pride that you get in safety, knowing that your family has a home that they can always go to. During COVID, landlords were sending their tenants updates. Hey, I'm moving in, or I'm selling this place. Get out. And you're in the middle of a epidemic or pandemic. You're worried for your family. Where am I going to go? So there's other factors also that benefit in being a homeowner.
How about 2008 when the sheriff was came up to the rental properties door and was handing out eviction notice? You were only lucky because your name was not on the eviction notice. So
I mean, very small percentage of people. You hear these great stories of, I rented this home for 20 years all my life and I've had a great experience. That's really rare. Most experiences are, I rented a home and the landlord was like, okay, I'm selling, or it's time for you to move out, or the rent's going up. So those stories are really hard to find.
Hey, well, we're at the end of our time, man. And you gave us a lot of good information. How can the folks reach you?
So you can actually go online and look up Saad.Chaudry Truist. I should be able to pop up, send you a message. I know we can link up. We're doing some business. The thing is, America is the land of opportunity. You have to set roots. You have to believe in the system. You have to plug into the system. Like you made an analogy about playing sports. You got to play. You got to get on the field and play. Because if you don't, you might jeopardize, your family's wealth, inheritance, safety, everything for future generations. So I commend you on what you're doing. Not only are you providing a service for real estate, but you're providing a service for knowledge, which you really can't put a number on.
Yes, sir.
So kudos to you.
I appreciate you. Hey, this is Hump Day Real Estate with Kendell DMV, and we're signing out. Mr. Saad, appreciate you. We'll get you back on it as soon.
Absolutely. I look forward to it.
Thank you, sir.
Thank you.